Hello friends, the topic for today's presentation is 3 steps to profitable stock picking. Stock picking is a very complicated process and investors have different approaches to it. However, it is wise to follow general steps to minimize the risk of investments. This presentation will outline these basic steps for picking high-performance stocks. Step number 1. Decide on the time frame and the general strategy of investment. This step is very important because it will dictate the type of stocks you want to buy. Suppose you decide to be a long-term investor. You would want to find stocks that have sustainable competitive advantages along with stable growth. The key for finding these stocks is by looking at the historical performance of each stock over the past decade and do a simple business S.W.O.T, strength, weakness, opportunity, threat analysis on the company. If you decide to be a short-term investor, you would like to follow one of the following strategies. Momentum. Momentum strategy is to look for stocks that increase in both price and volume over the recent past. Most technical analysis support this trading strategy. Using this strategy, you should go for stocks that have demonstrated stable and smooth rise in their prices. The idea is that when the stocks are not volatile, you can simply ride the uptrend until the trend breaks. Contrarian strategy, on the other hand, is a strategy to look for overreactions in the stock market. Research shows that stock market is not always efficient, which means that prices do not always accurately represent the values of the stocks. When a company announces a bad news, people panic and price often drops below the stock's fair market value. To decide whether a stock overreacted to a news, you should look at the possibility of recovery from the impact of the bad news. For example, if the stock drops 20% after the company loses a legal case that has no permanent damage to the business's brand and product, you can be confident that the market overreacted. Using this strategy, you need to find a list of stocks that have recent drops in prices. Analyze the potential for a reversal through candlestick analysis. If the stocks demonstrate candlestick reversal patterns, you should go through the recent news to analyze the causes of the recent price drops to determine the existence of oversold opportunities. Step 2. Conduct researches that give you a selection of stocks that is consistent to your investment time frame and strategy. There are numerous stock screeners on the web that can help you find stocks according to your needs. Finviz.com is an example of it. Step number 3. Once you have a list of stocks to buy, you would need to diversify them in a way that gives the greatest reward-risk ratio. One way to do this is conduct a Markowitz analysis for your portfolio. The analysis will give you the proportions of money you should allocate to each stock. This step is crucial because diversification is one of the free lunches in the investment world. These 3 steps should get you started in your quest to consistently make money in the stock market. These will deepen your knowledge about the financial markets and will provide a sense of confidence that helps you to make better trading decisions. Thank you for watching.